How you doing, guys? How's everybody been? It's been a while, so it's good to be back. I'm gonna try and take RJ's spot tomorrow. I can't promise you anything. I know it's hard to do what RJ is doing. Plus, I don't have my setups to do that, so I'll do my best to maybe jump in the main stage tomorrow, and maybe we can trade together. But again, it's not like a promise. I'm gonna do my best because I'm not even sure what my schedule is for tomorrow. But I'm trying to empty my schedule just to, I'm trying to help out RJ with what's going on with him. So we'll see how that goes. But that's for tomorrow. Hi. So let's start our day today. How's everybody been? I hope you guys had a great week. I haven't traded all week. I only traded with you guys that I don't even remember. I think it was what? BMR? I think BMR is the last thing I traded. I haven't even opened anything. Like if you see my charts, they haven't changed much since I haven't logged in for a week. It's been busy with work. So yeah. So let's start with your questions, see what you guys got for me. Let me answer a question that, I keep getting in like different forms, everybody's asking about it, which is PDT. Okay. Everybody keeps asking like, hey man, I want to get over PDT, or I have this much money, I want to trade and I don't know what to do, and should I do this, should I do that? And it's kind of hard to answer. Like, I'm just gonna put it this way, guys. So if you don't have the money for day trading, okay, so you have a couple of options. Okay, either you go cash account, or let's say I had somebody ask me like have less than 25 by a bit, okay, and he also doesn't want to be like a pattern day trader. Okay, so what could you do to get the margin and get the benefits without being a PDT? So just split your account to multiple margin accounts. Okay, so let's say you have 10 grand. Okay, put 2,500 in 4 different accounts. That will give you 3 trades in every account, so you'll have 12 trades through the week. And that can help you not being tagged as a PDT. Also, if you don't have enough money and you want to be trading, also have more than 3-day trades, split your money between different accounts. Okay, you can open an account in Webull, Robinhood, TD, Trade Zero, here, there. There's a million different companies that you can open an account with. So if you want to do that, that's another way to get around it. The other way would be doing cash. But if you do cash, then you can't take any margin. And if you want to short, of course, you can't do that. But anyway, if somebody's asking that question, they shouldn't be shorting in the first place. But just let's say, do you want to short? You can short on cash account. You can play. Like, the problem with not having cash accounts is that if you want to trade big stocks, it's going to be a problem because you're going to have to put all your cash in, and then it's going to take you 2 days to settle. So that's going to be a problem. So when I started trading, it used to be T+3. Now it's T+2, and you guys are about to get T+1. So cash account might start being more like lucrative for people to start using cash accounts. Since you have a T+1, that's almost like options now. So you can basically trade, get your money in the next day. Like, so it's not bad. So if you're smart about it, you can use half your cash, and then the other half you use while you're getting your settlement. And so you're always going to be trading with cash. So that's another thing that you can start doing. So I would say like there is a lot of ways to get around it. Okay, it's not just one. It's not. You have to understand, guys. Like, it's not. Everybody has a different situation. Okay, and depending on what you have, the money you have, the time you have, how much can you trade. Some people are busy. Like, they have a full time. They have a full-time job. Okay, I run a couple of businesses, so I'm pretty busy sometimes. Like, sometimes I'm not busy and I can stay home for weeks and working from home, so I can manage that. But sometimes I get busy, and like you guys see, I just disappear because I have stuff to take care of. So it also depends. Every person is different. You have your schedule. Either you have work, you can't trade every day, so you can manage around your life. But if you're trading every day and you want to trade every day, then you have to stick to moving your money between different accounts so you can get more trades, or just stick to cash account and be smart about it. Don't use all your cash every day, because then you're going to be stuck for 3 days. And just be like more smart about the trades you pick, because not every trade is worth your money at this point. So if you only have 3 day trade, you don't let's say you don't have a lot of money, you can open multiple accounts and you have just a small amount of cash that you're trading with. Okay, it's either you wait for the right setups and get the best trades, and then just don't overtrade at this point. You just be smart with your money and try to make the most out of your money. But you can't just jump in every trade if you don't have the money. So like that's something you guys like need to figure out based on your situation. So I can't really fix that situation for everybody. I'm just giving you like the general like information of what you should do. But it is hard when everybody keeps asking me the same question in a DM that I can't answer that question because everybody is different. Okay, what works for me doesn't work for you, and what works for you is not going to work for somebody else. So again, if you have enough money, because I think every account, I think it's 2,500 minimum for margin accounts. It might be 2,000. I'm not sure. It's like something like that, 2,000 or 25, depending on the brokers. So let's say you have like $5,000. You can have 2 accounts, and that'll give you 6 day trades in a week. So that might be a smart move to do. You can go that route too. Yes, you can go an offshore broker. I did that when I started. I lost a lot, and I learned my lesson because I wasn't ready to do that. So yeah, you can go offshore. I used to have like at my time there was something called the short trader, and short trader just basically became a scam and people didn't get their money. Thank God I was out of it at the time. But there was a short trader. But you have CMEG, which you can use. It's been around since I was trading offshore. But again, CMEG has their own problems with I think their margins, like you can trade stocks about $5, and their fees are insane. So you have to, if you can manage all this and be profitable, then yes, you can do it. Yes, but I would say CMEG is for somebody that has a strategy and you already have a great setup. You've been trading and you're profitable doing it. Then yes, you can do CMEG. If you want to move from a cash account or from a restricted, like a couple of trades a week, yes, I would do it then. But if you're starting, don't go CMEG because the amount of fees you're going to pay against you're not profitable, you're going to blow up your account. So that's also like a balance that you have to find. Okay, so if you're not profitable, you don't have the right setups, you don't have the right trading mind, because if you train CMEG, you have to think that the fees are insane. Okay, sometimes you don't get filled on, especially the pump and dumps, like the BMR and all that stuff. They will fill you like on multiple orders, and you're gonna pay for every single order. So let's say you put a $500 order and you get it at 100 each. You get 5 orders. You're gonna pay 5 full orders. At the time, I think it was $4.95 an order or something. So that's a $20 order, and just imagine you're trying to get out again. That's another $20. That's $40 just in fees alone, without anything else, without routing fees, without anything else. Just you need to get in and out. So if you took a loss on that trade already, you're down to $40 plus whatever loss you took. And it adds up pretty quick, because the problem is that I see people with CMEG, they go throw in $500 and it's 6-1 margin, and it's like, oh yeah, I have $3,000. But the thing is that if you take one big loss, the $500 is gone between the fees and your loss and everything, and the account is just basically blown up. So you have to consider that. So the only thing that I would recommend if you're gonna use CMEG is that just be good at what you do first before you move to CMEG, because CMEG charges a lot to give you that option to trade offshore. So just have that in mind, I would say. And also you have to consider the risk that you're trading on an offshore broker. You're not protected by anything. If they close tomorrow, take your money, you can come back here and as the FDIC or whatever to get your money back. You're done. That money is gone. I'm not saying they're a bad company. They've been around for many, many years. They've been around, like, at least, I would say CMG has been around at least for 10 plus years. I never heard of an issue like that, or I never heard of anybody not getting their money. So, but I'm just saying you should have that also in the back of your mind, that you're trading an offshore broker, that you don't have anything to insure you whatsoever if anything goes bad. But it doesn't mean you're going to go bad. I'm just saying, like, oh, that's always something you think of. What I've seen a lot of people do when I used to have my chat room is that they would go CMEG, make good money, and then take it back and just start trading in the US, basically. So they basically build up their account and then bring it back and just start trading in the US. So that's the way you would think. I wouldn't keep trading at CMEG. It's just a way for you to maybe get more capital, and just after that, do your own thing. So that's how I would look at it. But it's basically a step towards your getting a trading account. So I would say that's how you do it. All right, guys, let's start with the Q&A. I'm just answering that question because I seen that question in my DM so many times and in different forms, and like, but at the end it's all the same question basically. So I just wanted to throw it out there because I know everybody's been asking basically the same question. So I was just trying to answer that as a one shot so I can maybe answer everybody at the same time. Hopefully that answers everybody. Alright, guys, let's start with any questions. Come on, guys, give me your questions. I'm here for your questions. As I said, I didn't trade much, so I don't have really... I don't have, like, I didn't trade last week. I don't even know what moved, what didn't move, but I can look with you guys because basically I didn't even open charts or anything like that, so... So whatever questions you guys have, let's go. Questions. Guys, if you can, please put the questions on the YouTube because I don't see questions in the Discord. I'm not sure if you guys are writing in the Discord. What is the recommended setup indicators that Ricky put together for swing trading? I'm not sure, man. That's something I'm gonna have to ask Ricky. I'm not, so our question, you're asking for something that Rick is doing. I wouldn't know that. Honestly, it's something that Rick is doing. I haven't been doing swing trades in a while, so I'm not sure what Rick is using for swing trading. And I don't think Rick is doing swing trading, to be honest. I think Rick is day trading. I don't think Rick has been doing swing trading unless he did something when I'm not here. So I'm not sure of how to answer that question because for all I know, Ricky hasn't been swing trading. So I'm not sure. Maybe I'm mistaken or he did something in that week I was gone. But I can't help you with that. You're going to have to ask Ricky that because it's not me. So come on, guys. Next, any questions? Please put the questions on the YouTube, guys. I guess people are putting questions on Discord because I'm seeing questions on Discord. Hi. I guess we're gonna have to go. I'm new here. What do you normally trade? I trade stocks, man. That's what I trade. When I sold a stock for a loss and why? Okay, what is your stop loss rules? Can you walk through a recent example? Okay, man, so my stop loss is normally I have that in mind before I get into a trade. Man, I haven't traded in a week. I can't even remember what I ate yesterday, so you're asking a very tough. I'm gonna have to go through statements. But I think I got stopped out in BMR after I traded that day. What is? Oh my god, I traded something else that day. I'm trying to remember what I lost on something. I can't remember what is it. It was another one. What else was running? It was another pump from the week before. I can't even remember what was it. Jeez. But I think I took a loss at this one here in BMR. I'm just trying to remember after I traded here. Where did I get in again? I think I traded it somewhere here again. I think I got in here. Yeah, I think I got in here. Was it this one or this one? I'm trying to remember. You know what? It was this one here. I saw the crossover. This was here. So I basically trade this one. I was going to go for a scallop right here. It was getting closer to the 3 p.m. kind of time for runners. And I seen the kind of like that it's about to make a crossover here. And it failed and it came back. And I took an entry like right here above the crossover. Right here. So before I even got in, because this was a scallop, it wasn't really one of my trades that I like have targets for. So for something like this, my stop would be something below this candle automatically without even like thinking twice, because it's just a scallop. Maybe it would have run, but at the time when I took it in, I think I would say somewhere here. Don't quote me exactly. I think it was like 1890 or something, like somewhere here. I took it in, but let's say you're getting in here. Your stop should be below this candle right here. So anything below 1850, you should be out. So that should be your stop loss right here. But I wouldn't trade it anymore like that. So, and it's different, man. Like the thing with stop losses is that every stock is different. Some stocks are very volatile, some stocks are not. So I can have a wider stop loss just based on how the stock is reacting. Okay, so if it's a low float, I know it's very volatile. So my stop loss at this point, I don't normally put stop loss on these because I'm watching them and I have my, like, I'm ready to just execute everything, market, and just get out. So it's kind of hard to put stop loss on these. But if I'm trading these, I normally have the stop loss in my head before I even start trading. So I think we traded, like, when we got in here, okay, like right here. Okay, so when I was trading this and we got in here, okay, if anything for me, my stop loss will be below this candle right here, because this was the lowest here. So if you think about it, you have higher highs right here, and then you're doing this. Okay, I didn't see this, so you had only this here at the time. So if you're getting in here, okay, your stop loss should not be below this candle right there. That's how my thought process is at this time, because like if you put here, that's like a liquidity zone right here. So that would be my stop loss. It probably gonna touch the liquidity zone, so I wouldn't even bother like trying, because this here, you see all these spikes. So this means there was a zone right here. So I wouldn't go below this here. So if I was getting in here when I was getting in, so I got in here somewhere, started like loading here. So if anything, I would be out by, if I broke this candle here, like tested it and it broke it, I'll be out. So whatever that out would be, like 340 or less, like this here, so basically this is 345. So my out would be somewhere here between 345 and maybe 335, somewhere here. I will watch this area here, and if I see a breakdown on high volume, I'll just execute market, or at this time it was limits. So I'll just get out on a limit. It's harder also in pre-market, so you have to consider that you go on a limit, and in this point, I have to execute on the bid and take even a bigger loss. So that's why I watch it and I just execute on the bid, whatever that is. I just get out, like somewhere here. So this would be my exit area, right? This whole area here would be my exit area. I'm trying to set up my system to mimic Ricky's computer. However, I don't know what scans and shorts he's using for pre. You guys are asking things that has to do with Ricky. It has nothing to do with me, because Ricky's setups are different than mine. So I can't help you with what you're asking. So if you want something that you're gonna have to ask Ricky about it. So you guys don't have to do what Ricky's doing or what I'm doing. That's exactly what Bobby was also talking about yesterday. So Bob was trying to tell you the same thing, guys. Like, that's why we don't live trade with you guys, because we don't want you to mimic. Like, you can't just mimic us, guys, because you know what? It doesn't mean that RJ scans are amazing. It's amazing for what he's looking for. You can take it and set it up your way to make it work for you. Okay, so the scanners are amazing. Okay, but it doesn't mean you just take it blindly and trade it, because what Ricky's looking for might not be what you're looking for. That's why Ricky had this video that he just did showing you how can you set up scanners. So you can take some from what Ricky's doing and add your taste to it. And that's how you're supposed to. You can't just mimic Ricky, because Ricky's been trading for 30 plus years, guys. You can't just mimic him thinking that because you have his scanner, you're going to trade like him. So you also has to consider, that's exactly what I keep saying too, guys. Like, the way I trade, we're just showing you the way, okay? but you have to find your own way. Okay, you will never be able to trade like me, okay, or trade like Bob, or trade like Ricky. Okay, every one of us trades. Is Ricky trading better than mine? No. Or is mine better than him? No. But I have my own way, my own risk tolerance that's way different than him. It doesn't make me a bad trader or a good trader. It doesn't make him either a bad or a good trader. It just makes it work for him and makes it work for me. So you have to find what works for you guys. You can't just mimic us thinking that if you have the same tools like us, or the same setups, or the same indicators, or this and that. No, it's never going to work. You guys are looking for what? You're trying to find what works for you, okay? Everybody's different when it comes to trading. Trading is a lot of numbers, and it takes a mental toll on you guys. It's about numbers, it's about losses, profits. You're seeing greens and reds and all that, and every person reacts differently, okay? The way I manage my emotions is way different than anybody else that manages his emotions, okay? And you never be able to be like me, because you can't be having the same emotions like me. And that's what makes the trading is so different from one person to another. And that's why we can all be profitable, and everybody's trading something different. So I would say you guys need to get the basics right. It's all about the basics. Get your basics right. Find the lane that works for you, and then take the tools that Rick gives you guys and just add it to you one at a time. Okay, don't take all the tools at once, because then you're gonna get confused. And again, if you have, look how I trade, guys. That's my chart. I don't have a ton of stuff. I don't have nothing. It's a plain chart. It's all about volume, candles for me. I don't need a ton of indicators. I don't need none of that. Okay, it's good to have indicators, but again, indicators sometimes messes you up. So if you have a good call and you look at an indicator and it messes you up, you get out of the trade, or you don't trade it because the indicator told you so, even that you were looking at the right stuff, looking at the right numbers, looking at the right candles and everything. So you just need to get the basics right, guys, for the millionth time. It's all about the basics. People always skip the basic and they want to jump to the finding the golden indicator. There is nothing like a gold, like you will never find it. It comes again, even Bob yesterday when he was talking about options, look what he said. He was looking at the volume and he's trading options. Like, even I don't trade options, but he's still using the same tools. He's using his candles, his volume, and he's doing options based on that. It doesn't take rocket science, guys. There are people are trying to sell you AI indicator or this indicator that would make you a shit. That stuff does not exist. I have tried them all. I have seen them all. They don't work. It's all about the basics. Get your basics right. Get your trade plan right. Know what you need to trade, what you need to stay away of, and that's how you make money. Be profitable, and that's what all it takes. Everything else is basically nonsense. Do I ever trade options? Sometimes, Andy. I don't trade options like Bob do. If I trade options, I normally take a position based on risk that I'm looking for, and it's normally like more like a swing. I don't take it like ODT or anything. I don't do what Bob does. It's not my cup of tea. I never did it like hardcore like him, so I don't do it like that. So I stick to like more of a swing options based on things that I'm seeing. That's all I'm seeing. Like for me, like like I'm looking at CVNA right now to take a put on it before earnings, just based on some things that I've been reading and numbers I've been looking at and a lot of financial data I've been looking at. So I'm taking a swing put at some point against Carvana just based on that data, but I'm not playing it like the way Bob's play it. I only want to see stocks from about two. Yeah, of course, nobody trades 1K stocks, man. Go look at Berkshire, man. And yeah, trade what fits you, man. It doesn't mean that, like I said, I don't trade anything below $2. It doesn't mean it's bad. It just doesn't fit me, for the amount of money I trade and the amount of positions I take. Anything below $2 for me is a waste of time, and I will get stuck and I won't get out. So whatever works for you. But again, it's all about money and percentage. It doesn't matter, man. I can pay you. Get one share for $1,000, and that shares move 10% and make $100. Okay, same thing. But because you guys look at these, the problem is that everybody looks at these stocks. Okay, but this is not the market. These are not the market. These are flukes that happen, and the way they happen, also people lose money. So you might get lucky every time. You're not gonna get lucky every time. Get it from here or here and right. Sometimes you will be the one that gets it here and it goes this way. That's the problem with these stocks. So these stocks are profitable to a point, but this is not how the normal market reacts. So You have to consider that too. So it's all about percentage, guys. Don't look at money and don't look how big the stock is. It's about how much percentage you can make on the trade, and just be consistent about doing percentages. Okay, the more you make every day, doesn't matter, 1%, 2%, 3% every day, you're killing it. You're killing it. Okay, don't look for these, guys. You're always looking at these, or looking at, oh, I wish I bought BMR here at $4 and it went to $30. I would have made 1,000%. Even me, I didn't ride this to here. I was out here, right here. I took another scallop somewhere here. I don't remember where, but my main position, my biggest position, I was out here. That was insane. Like, I mean, for me, that was nuts. Like, that was almost close to 250% on my position. Okay, why would I even, like, would I ride it to here? No way. Yeah, easier said now. When you see the chart and be like, oh my god, I know this thing was gonna run to 34. No, for me, even when we were trading pre-market, I told you guys what I think. I said I'm going to 550 and then 6. That was the biggest like, that for me was insane already, running from here to here, like, without seeing all this madness. That was more than enough for me. Like, that right here, just riding this one over here, I'm already, like, I would be out. Like, yeah, I took out some and I took out some, I took out some and I took out some, and I kept taking out, because from here to here, it's already, that's massive gains. It's not normal to get these gains on trades. Okay, and this is not every day. So the problem is that new traders like me, when I was new, they would think every trade is gonna do that, and that doesn't happen. And look how many trades we're seeing, guys, that will start like this in pre-market, get to here, 8:30 comes, and the stock will be down here. I just keep bleeding all day until it closes here or something like that. And this is how it normally, for these stocks, that's 99% of this. That's why you take your profits. Okay, if he went from 4, okay, to 4, from 4 to 5, okay, that's almost 25% gains. 25. You guys have no idea how big that is to make on a trade. 25%. Okay, I'm not trying to sell you to go on the 200-300%, because this stuff is not normal. Okay, we're not playing out of the money options and trying to get 1000%. This stuff is, you better have just go play roulette, you know, in the casino or something, you know, blackjack or something. That's the same thing. But 99%, what happens that they go up, and then pre-market comes, sellers comes, and they just push it down, and basically just bleeds all day. So always take your profits, guys. Don't expect that I'm telling you right now, it will never happen that you think that you will buy a stock here and you're gonna ride it from here to here. It will never happen, ever. Even me, it will never happen. It's unrealistic. Okay, it's unrealistic. Yeah, you can play multiple times, yes, but you will never ever get it from here, from $4 to $34. It will never happen. It will never happen. You hold it like that. And this is not a long-term trade. That's a one day. I'm not talking you're buying AMD at $90 and maybe 5-6 years later it's at maybe $300, $400, $500. That's a different story. But you getting in a trade in one day from 4 to 34, that's never gonna happen. So just stick it out of your head and just trade like normal people do, and look for the small gains. Small gains is all that counts. Because the problem is that when you start getting these trades, I promise you, everybody's gonna think every time that the trade goes against it. Oh no! It's, you know what? It is gonna bounce. It's gonna make 100. This stock is gonna make 100% move or a 200% move. I know that. I feel it. It's coming. And you're gonna start convincing yourself when the stock is going against you. Oh no! Why is this not this? This should be the next runner. This should be the next 1,000% or 2,000%. And you're gonna just keep telling this to yourself when the stock is bleeding. Just insisting that, you know what? Oh, I'm gonna hold this loss, because I know it's gonna bounce, or I'm gonna add more and it's gonna bounce, but it's not. It's never gonna happen. So just play smart. How do you set up pre-market trades? Follow the volume, man. That's what I do. That's all I do. There's nothing else. I see the stock and I look at some stuff before I trade it. Like if they have any offerings open. I look at their daily. I check the charts on the 4 hours daily, and then I go Besmic, look at some stuff, look at their filings, and look at the news, and then start seeing the volume, and then I take a decision if I'm gonna trade it or not. So It's just basically you just do some research, quick research on the stock before you jump in. But I don't just jump in, that's for sure. I don't see this here, and you'll see me automatically jump in. So when I see this happening, what I do is that I leave all this nonsense. I don't even look at it, and I go do my thing. And then by the time I come back, it's already doing a pullback or something else, or I made a decision what I'm gonna enter, like put my lines and everything like that. So I know where I need to enter, when I need to exit, and kind of look at the stock, and then make a decision what I'm gonna treat it, what's my entry, and what's my stop loss, and all that good stuff. So when you see a stock that you might get in, like you see, let's say you see the news coming out, okay? You see the news, and then you see the stock, okay? First thing you do is just go look at the chart, like go look on the daily chart, see how is this stock acting? Like, is this stock even a good stock? Is it a bad stock? Like, looking here, we already, like, I put all these lines here before we trade it. So by the time this happened, I already have my support and resistance all the way to like the whole stock. And okay, I'm done here. And that took me maybe a couple of minutes. And then I go read some on the stock, see on the filing, and then read the news. And by that time, the stock is either pulling back, or it's giving you more data. Like, because you know how many times by the time this happens, I will go look at this stuff and do my support and resist, and then what? The stock is gonna start dumping. So I was like, okay, it kind of saved me from taking a dumpster fire. So it's good when this happens, you go look at other things until the stock kind of normalizes a little bit, and all the people are just jumping in and getting burnt and all that. You kind of be the smart one and just wait for a good entry, if you're gonna even trade it. Because some runners I see, even Rick sees, and we don't touch them. It looks like a pump and dump. There's no news. They have an offering, or it looks like it's more of a room pump and dump, and there's not even enough volume. Like, I don't see volume increasing or anything. I see a spike in volume, and it's just going down. So it's a pump and dump. I'm not even gonna touch it. So that's how I really set up my trades in the morning. Because don't forget, there's a lot of stocks running, so you kind of like. So it is hard to figure that. You're welcome, Getaway. I don't know, somebody was asking if what is the YouTube channel. I just posted it here, guys. So it's posted on the chat. So if you don't find it, it's right there. If somebody can post it in the chat for the others, please. I guess somebody's asking where is that. So if you can, guys, post it. If somebody can post it, I'll appreciate it. Nice. No, I don't have a scan for volume. I have a scan like Ricky's, which is basically seeing these moves. But then I look at the volume for these moves. So I kind of analyze the volume of the move. But it's the same thing, because in your scan, you kind of have like a minimum volume. Like, let's say Ricky has like 200,000 or 300,000 or whatever he has. And when you see that volume spike, the scanner kind of tells you, oh, okay, there's a spike in volume and the price is moving up. And then you do your own like analytic on the volume here, on the bars and everything. That's what I look at. Because the scanner will only show you like if the stock is moving up or down, or what's going on, like a quick telling you like, oh, okay, BMR is moving on high volume and it's up to 20%, 30%, 40%, and the scan is just going to keep going crazy. But then you come here, and that's what you need to check, like your volume, like how is it acting? Is it like stable volume? Like, is there volume coming in, or just a couple of spikes and then the volume is dying out? There's no more volume, Like most people over here probably said the volume like kind of died, which was a good thing. But as you see what happened after that, we just spiked. So that's how you know, like, there's more interest in the stock. Like, the stock is still going and there's more volume. But let's say like you found this volume going up like this, and then it's just slightly just going down, and then after these it's even going lower and lower and lower and lower. Like, you don't see the second spike here. Then like, but if you see here, look how the volume is just acting the whole way. Just like, even like before the market opens, like we have big volume, but we're dwarfed after that by the market open. Like how big was that? And then you kind of dwarfed by just the opening bell. So you know that volume is just coming in. It's just coming in, coming in, coming in. And then as you see here, we're still coming in. Like it slows down and it goes up, slows down, and it's like building up right there. You're just building up, 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 up. And after that, you see the volume kind of, that's now, look at that. So all these spikes, you didn't see it. And now this is what we're looking for. Look at this. You just basically died out. You have these little tiny spikes right here. Probably people like that got stuck or like averaging down. And that's like these volume spikes from the market makers, like fooling everybody to just take it down again. And that's it. You're dead after that. Just dead volume. There's no volume. So volume is your friend always. I use scanners just like RJ's. So it's just scanners. That's the only way you can find stocks. Either scanners or somebody tells you something, or my buddy texts me something that I don't see. Like, well, mostly it's scanners because you know you can watch 10,000 stocks. So that's what the scanners are for. So, and Ricky scanners are amazing. The pre-market scanners you have are amazing. They catch everything and they're free. So you can't really get any better scanners than that. But there's a gazillion scanners online. There's Ricky's. I wouldn't even bother getting anything online because RJ's scanners are amazing. So I would stick to the RJ ones because you can't go wrong with the RJ scanners, honestly. I don't focus much on aftermarket unless I'm in a trade or I'm seeing a trade or I'm waiting for earnings. But these are the only times I trade aftermarket. But some of these stocks, they run aftermarket. But no, they don't run right away. Like, they take some time to run. So they kind of wait for the market to like sleep. Like over here, even that I said that this is going to run after hours. And I think I waited, like I got so bored, like maybe here or something like that. I just got bored of waiting. And I think I got out. Like, but look what it did after that. So normally it comes like somewhere here between 4 and 5. They would do that, and that's when most traders got tired and they're not trading anymore. But after hours, even worse, like than pre-market. So after hours, normally it's way less volume. So I would only trade this if there is new, like let's say there is a news on a stock that came out after hours, and it's running. I would consider playing it, but it's rare for me to play after hours unless it's earnings or something I was already waiting for to move on the downside or the like upside or downside. But I don't look to play, like if I'm not in any trade and I closed and I don't have earnings to play today or anything important, I wouldn't even bother with after hours. How do you calculate where the stock is heading? What do you mean calculate where the stock is heading? It's kind of I'm not getting the question, to be honest. By what is calculate? I'm not sure what do you mean by that. Let's see what we have on Discord. Is it better to get in and out with limit or market? RJ uses by estimate. It depends, man. I use mostly markets. I use market orders and bid and asks. So for me, that works out because I execute fast. And I really don't bother with the fiddles that much because the 1 penny, 2 penny, 5 pennies don't really matter to me. So let's say I want an order for 380. If I get it for 390, it's no biggie. Especially if I know it's that I'm looking for a target that's like 450 or higher. That couple of pennies is not gonna kind of ruin my trade. So, but some other people like limit orders. You can stick to that. I do sells on limit orders. So my sells are limit orders because I put them and I leave them. So my sells are mostly 99% are limit orders. Unless the stock is like bouncing or doing something against me, then I'll get out as market. Like let's say I see the stock is kind of like doing a reversal or it's not gonna go where I need it to, then I can get out market. Just cancel my limit order and get out market. Yeah, I guess maybe that's his question. That's what I wanted to understand. Like, is he asking about target price or like I didn't understand how can you calculate the stock is heading? I think I'm not sure if you're asking for target price. I mean, my target price are normally gonna be like my zones. So I'm looking for these zones, and normally these are my targets. That's what I see a target like over here. Like you see, we tested once, twice. That could have been a flip, and we just reversed and went down. So normally I would sell some here. So when I was entering here, I even sold some here. I think right here somewhere. just took a little sell right here, just based on these lines that I had, and then after that I sold some here, which is fine, and then I think I sold some, like I was waiting for this and it didn't happen. I think I sold some right here also, and then sold some more here, and that's it. I waited after that, and this is when I became patient because I already sold, and now you can be greedy. Now I became greedy and I just waited, and I think I closed the rest of the position right here, 11:39. I remember this very well because I seen it going for a halt, and I sold all my position here, even though I was supposed to be more greedy, but it's okay. At this point, I was very happy with my trade. I'm not gonna look back. I was happy with my ending. It doesn't matter. I wouldn't know that this thing is going to 34, and neither anybody else. So I was happy. Just I didn't want to get into a halt, especially it didn't halt like since the market opened, and it halted here already, and that was the second halt, and I didn't want to be in a second halt, to be honest. So that's why I got out. But again, that's what I did here. Maybe you wouldn't have done. Maybe you have waited, but and honestly, I could have waited. Like at this point, I could have waited because I already sold a lot. Like I think over here I was out like by here and selling some here. I think I sold some here too. I think I only had maybe 30% of my position left. So I sold already 70% of my position. So I could have held this even till it drops to here. I wouldn't care. But at this point, I was up a lot. So for me, I was like, you know what? I'll just take my gains and just call it a day, and I'll be happy with that. So that's why I went out. But honestly, I could have just stayed because I sold. And that's the beauty of just skinning out, guys. Because you know what? Over here, I had the option to stay or leave because I'm comfortable at this point. I don't care. I already sold. Even that I sold in the lows here, I'm okay. It's money. I made money, more money, you know, and extremely more money. So I was comfortable holding through all of these, you know. But if I didn't sell everything, what's gonna happen? You would have maybe got, like if I didn't sell here, okay, and here, a little bit. This here maybe would have taken you out. You would have stopped out right there, and didn't even get from 5 to 11. You missed out on the $6 move just because you're holding tight to the whole position. This would have taken you out also. I promise you. If you see this spike, yeah, over here it looks nothing. But if you're in this spike here and it went from 860 all the way to 620, okay, you probably would have been out full position right here, stopped out. So that's the beauty of just getting out, guys. It's okay. Take some profit. It's okay. At least it gives you the option to keep pushing, to keep getting these gains, you know. And like I said, I could have stayed here, maybe sold another 15, the less, like I had 30%, I could have sold 50% of that, and I held the last 15%, all this here, and I wouldn't bother with any of these moves. But for me, I was happy, I was satisfied. That's why I went out. Was that a mistake? Hell no, it wasn't a mistake. For me, that was an amazing execution, and I'm happy with it. I wouldn't even regret it. If I had to do it again, I'll do it the same exact way. I wouldn't even think about it twice. Yes, these are all my lines. I put all these myself, so that's not a script or anything. So these I put manually. So yeah, every line of these is basically what I seen on the chart, and I just put them there. And these are mostly the lines I'm looking at. Oh man, I don't remember. I think over 5. I don't remember. Like I think I had like over 5,000 shares. I think closer to 5,000 was like 5,000 shares that I had here in this trade. But I didn't start them all right here, man. So I took one here, I took some here, and then I added here and I added here. And I think when it bounced here too, I added some more here. I kind of broke my rule and I added some more on this here. But I had a feeling it's just gonna go. What I mean by it's gonna go, like I had a feeling it's gonna go to here, okay, here or maybe here. These were what I was looking at, so that's why I added here, just based on these. That it might test here and then go. But I never thought it's gonna do that. So it was kind of. You have to think that trading also has a little bit of luck, guys. So you know, so it's not always gonna be in your favor. But it's okay to take some chances sometimes when you feel it. Just take the chance. But again, for me, the chance was like that I'm gonna go here or here. Okay, I never thought we're gonna go where we went. So just have this in mind. Even when I was doing this, my expectations was to be here or here. So, and for me, that was good gains. I'm happy with that. I'm looking at 30% almost my full position right here if I sold. So that was a great trade for me. I'm not looking for anything crazy. 20-30%. I'm happy. What do you mean? These lines are all showing on the daily. If you go back on the daily, they were there. On the daily, on the 4 hours, they're right there. Here you go. That's how I got them. From here and here and here, here, right there. And then if you put on the 4 hours, you might have some more. So at the time, I think I did 4 hours. And here you go. That's the 4 hours right there. Here, here. Same thing. And I think I took it more on the daily, but like you can see here. So that's how I did it. It's all about going back to the data. The more data you have, the better it is. So if you have more lines intersecting, then it's a better thing to see. So that's what you're looking for. I look for filings. I look if they have any offering. Like for the pump and dumps, I mean, I only look for if they have an offering open. I don't look for anything else. Like I'm not gonna read their financial statements because they are pump and dumps. They're ghost companies. They're trash companies. I'm not even gonna bother reading anything financial. But I just see if they have any offerings open and if they have any cash. Are they cash? Do they have cash or they don't have any cash? That's all I look for. I don't look for anything else really. Nothing worth looking at. You're wasting your time with these companies. If I'm investing, it's a different story. Like I read the whole financials. Like with the earnings too, I read the whole thing. But these are stocks either I'm trading or I'm holding. Yeah, so basically dilutions. Yeah, you're basically looking if you're gonna get diluted or not. It's not just dilutions. All these stocks are diluted. Like all this garbage that we trade, they're all diluted. Like these stocks, like without the if you look at the RS, they did like 4 or 5 different RSs, and that stock is now worth like $20,000 when it started trading. So we are diluted anyway. It's not just the dilution. You're just seeing if they have any cash or they don't have any cash, and they're gonna push another offering in that, because most of these ghost companies, what they do is that they push the stock and then they get you in an offering right away. It happens sometimes same day, midday, pre-market. After hours. It would happen after hours sometimes. It happen next day. You never know. But if you know that they have an offering that they just filed maybe 2 weeks ago, okay, like an S13 or something like that they filed 2 weeks ago, you know that there's an offering coming because they need cash. They don't have the cash. So that's what they're going to do. They're probably going to drop an offering. But when they're going to drop it, you never know. They can drop it, like I said, midday. I've seen some of these, they're dropping the offering like by 12 o'clock in the afternoon. In the middle of the day, like when we're trading, you will find an offering right there. Just kills them. But basically, they reach a price that they want to dilute. Because you have to think there's companies that are pumpers. Like there's companies that in the background that get paid to move these stocks. So some of these ghost companies, what they do is that they pay these companies money and they will pump their stocks and they will hit the price they want and then they drop the offering. So, you have to think of that too. Oh yeah, they're selling it to you, yes. We're the schmuckies, yeah. The bag holders. So that's why, like, what I'm saying about these is that that's not the norm. The norm is like they go up a little bit and they bounce down. So this stuff is not normal. This or the other one I missed, which was, I think, what was it, Hollow or something like that? Was it Hollow? I don't remember. Was it this one? No. Was it? I don't remember. It's the one I missed also, and it was another week I missed something. Was it this one? Maybe it was this one. Oh yeah, I think it was this one. Yeah. So I missed this one. I didn't play this one. Yep. Yeah, that's the one I missed right there. Yeah, so I missed that one. So these ones are not normal. Like you will get a couple of these a year. Okay, but the norm is not that. The norm is just pump and dumps. We get also, like, we've been getting some of these, but normally this is the time of the year we get this stuff. So CRBP was another one we got. This one was good too. I played this one pretty well. I like this one. So You always get these in the between February and March, maybe till April, and then the market dies out. Maybe you start getting some more end of the year, but I would say after April, you probably won't see these anymore. This is the time now. The market is pretty hyped too, so that's helping all this like dumpster stuff keep going. So you have to keep that in mind. I didn't even see the futures. What the futures did yesterday? Oh, nothing. Oh, wow. Just pure flat. Oh, nothing. Uh, yeah, so be careful with that stuff, guys. That's why, and that's the first thing I look for. That's why I go look for offerings, so I know if I'm gonna get stuck in this stock. Because I can't tell you how many bags I held when I started trading. I had bags and bags and bags. It just keeps adding up, and it becomes from a bag to a suitcase, and and it never ends. And it becomes now a prayers that you're praying for the stock to go up, which will never happen. So it's true. Yeah, use ask and bid. This would be your best option. If you want to do it, just do it bid and, because what bid and ask is doing is basically putting a limit on the bid. That's what you do. So if when you sell, let's say you're selling at bid, you're basically putting the limit order of the bid. So it's basically a limit order, but you're just choosing the bid. So it's a little bit faster. But the problem is that sometimes the bid moves, and then the limit order is not going to get executed. So you have to be kind of fast. So that's why sell bid is kind of easier. I know you're getting out on a little bit of a loss, especially if the problem is with bid and ask. Let's say, like, look at this here. You have 198, 97, 204, 1. Okay, that's the difference. $6. I know it's a waste management stock, so it's a $200 stock. But again, that's a $6 spread. Okay, so executing on the bid, if you're up, you have to consider that you're gonna lose $6 out of the profit that you're supposed to make. So you always have to look at the spread before you decide them making that, because sometimes it sucks if they are wild. You will take bigger losses if you're like in the red already, or you're gonna take less gains if you're in the green. So just consider that depending on the spread. So sometimes what I like to do is I watch the spread, and if the spreads get tighter, that's when I execute, so I get a better spread. And if the spreads gets wide, I watch it till it starts getting a little bit closer, and I get out. So you kind of have to watch level 2 when you're doing that, because like I said, like, it depends on the spread. So if the spread is bad, it's not gonna be the best fill for you. So consider that. Okay, what else? Who else has a question, guys? I mean, I didn't really prepare anything for this session, guys. I did it for you because I haven't been here for a week, so I'm strictly doing it as a Q&A. So whatever questions you guys have, just for me to answer, but I don't have anything in mind. I've been working all week, and kind of my brain is fried. So who's next? Anybody wants to jump in, ask a question? If that's the case, I can open Discord. So you mostly trade the underlying. I don't trade that much options, man. I trade stocks, and I hold stocks like long term. I don't have. If that's what you're asking, Chris. So yeah, I'm playing the underlyings, and not the options. Where do most short sellers sit and wait? Oh, that's a tough question, man. They normally sit at at support, like at like same thing, like support and resistance. So if there is resistance coming, they are waiting for it, and that's why sometimes when you know that there's resistance coming, and it hits, okay, and it fails multiple times, then probably they are just pushing it down. So you just think of it like whatever you do, as long shorts are doing it the other way, basically. So if he think that there's, like, you know what, the support is gonna hold and it doesn't, the short is gonna see it, okay, that's good for me, and he's gonna push the price lower. Or if he hit a resistance and the resistance doesn't break, for him that's amazing, he's just gonna push it lower because he couldn't get it. So just as you think that you're trying to break resistance, he's trying to break the support. So it's kind of flipped. So I'm looking for support to break if I'm gonna get a short. Either the resistance doesn't break or the support breaks. That's the way you're gonna enter short. Because if you think about it, if you're going long, you're only gonna get long if your support holds and either or you break resistance, if that makes any sense. So if you're going long, you're gonna wait for a resistance to break and then go long. Or if the supports hold, you're gonna wait for the support to hold and be tested and then add to your position. He's thinking the other way. So he's looking for the resistance not breaking so he can jump in, and the support kind of cracking so he can get in. That's how it goes. I mean, there is more a little bit into shorting than that, but I mean, honestly, if you really get super good at longing, shorting is super easy. I mean, I don't mean by super easy that you guys do it tomorrow. I'm just saying, like, if you get everything right and you're doing long and you're profitable in the long positions, getting into shorting is not gonna be as hard as you guys think. It takes just changing some things here and there and adjusting your risk, but it's not that bad. Trade. That's a kind of a good question. Again, we're gonna have to go back to the point. It just depends on the stock you're trading. So if I'm trading the stocks, like my stocks, like let's say I'm trading waste management, I would never look, like when I'm trading stocks, I would never look at anything below daily, weekly, and monthly on these stocks. So for the pullbacks, for me, it is gonna be on the daily pullbacks. It would never be on anything else. But it just depends on the stock. So again, if I'm trading these and I'm looking for longer time frames, then yes, I'm gonna look at the daily, monthly, and weekly. But if I'm trading the garbage, the pump and dumps, I'm gonna look at the pullbacks on the 1 minute, 5 minutes, maybe the 15 minutes. But mostly it's gonna be on the 1 minute, 5 minutes, and the 15 minutes will only be for confirmation, and that's about it. But with this stuff, you can't really trade this like on the daily, like look at the daily. I mean, there is no daily really. What kind of pullbacks are you looking for, And these are not considered pullbacks. It's just the volume basically just died and it's just being held by some bag holders, but I mean, there is no volume. You're done. The volume is kind of like, and that's the problem with these. That's why you become a bag holder, because like you went from 33 million to now trading 100,000. Do you know how hard it is now to get out, or the stock to even move? It went from 33 million to 100,000. That's like insane. That look at that day by itself was 83,000. You went from 33 million to 83,000. So yeah. So again, it depends on the stock, Trey. It's not for trading, guys. You have to understand that it's not like, it's not one size fits all. Okay, every stock is different, every trade is different, and you have to adjust that. You have to adjust to the trade, you have to adjust to the stock. It's not like a one rule that fits everything. Okay, everything is different. That's why the market is full of stocks, full of indices, different things. It's never gonna be always the same thing that matches on every single stock. It's very hard to do that. So you have to adjust your mentality based on what you're looking for. So again, if you're trading big caps, they follow daily trends. They follow trends better than anything. So I would stick to the daily, monthly, weekly. If you're trading this stuff, I would stick to the 1 minute, 5 minute, 15 minutes tops. You can probably do 30 minutes if you want. If you're gonna swing this stuff, I would look at the 30 minutes maybe and the 4 hours. Like looking at the 30 minutes, it kind of makes sense. Takes out a lot of the noise out. So kind of when you look at it here at the 30 minutes, you kind of were like holding here, all this area. So you know that this is a great support, and you know that if it breaks, look when it broke, like look what it took it, because that's like maybe what, 5 days, 1, 2, 3, 4, 5, 6, 7 trading days that I was stuck in this consolidation area here, and it tried to break, didn't break, went down again, tested, tried to break, tested, went under it, and then tested, and then he broke. I rarely look at the tick charts, man. I sometimes I look at it, but I stick to 1 minute. Easier for me to read because I'm looking at other things. So the tick is kind of hard because it's super fast for me. But sometimes like I either if I use ticks, I have the 133, 75, and 20. If I even look at them, but I don't look at them that much. I normally keep it at the 1 minute. But yeah, you can use ticks if it works for you. Ticks are not bad, but they're harder to like. If you're looking at a lot of stuff, ticks for me becomes harder to watch. So that's why I stick to the 1 minute, not the ticks. It doesn't mean it's bad. It's just for my style and what I'm looking at. I'm also watching level 2 when I'm watching a lot of stuff, so ticks become harder for me to watch. You're welcome, Trey. Let's see if somebody left us something on the Discord. What time frames do you trade? I know we trade the 1 minute, the 5 minutes. Again, and sometimes I have these. So I also look at these here, the 1 minute here, and then I have this, the 15 minutes, and this I can sometimes switch to the 30 minutes. But normally it's the 1 minute, 5 minutes, and that's about it. But again, it just depends. But mostly, if I'm day trading, it's always 1 minute, 5 minutes for me, and 15 minutes. These are like the main ones for me. And then if I want to go in the higher time frames, normally the higher time frames for me just to put some trend lines and stuff like that. But I'll just stick to 1 minute, 5 minutes, and 15. What else, guys? Don't be shy. No question is stupid. So ask anything you want. I'm here to answer your questions, guys. So any questions, guys? I'm trying to see if I have any questions on my DM that I can answer. Let's see here. I had a lot of DMs, so I'm trying to. Okay, that we answered. Okay. I think Ricky L left me a question asking, do you have a setup for a single screen layout workspace that's shareable through TS? Here's an example of, I think it's really good. Not really, man. I don't have anything like that. But it's easy, man. Just go to what I teach you, the first one that I did with Ricky. Just go on a flexible grid. Just have maybe a one chart here, and just have everything else here, like your, or just use active trade. Like if you just want one, well, just take the active trader. I mean, I wouldn't, like, that's more than enough to trade any one stock. You wouldn't even have to go far away. You have active. You can just add something else to it if you want, like level 2 under it, and maybe news and everything else you need, and just move them around a little bit, and that's all you need to do. I wouldn't even bother doing a whole flexible grid just for one chart. So that's something I would think of. Okay, most of these are Mostly answered. There's a lot of them about same question basically. PDT. So I cannot answered most of these. Okay, perfect. I see some question. How long did it take me to become profitable? Oh, many years, man. Many years. I was losing a ton first couple of years, and then I almost studied for 2 years, almost a year plus, year and a half, closer to 2. I was just kind of studying, I would say. Not trading, but following the markets every day, just sitting in front of the screen every day and either paper trading or trading in my mind or stuff like that. But I was trying different things, trying these indicators or pumpers, and I tried to stay away. And I kept cleaning my head, and I think I only became profitable when I started to understand that there is no golden shoot, like no golden indicator. You're never gonna be a winner in every trade. That's something also that I think one of the biggest things was for me, that I thought that every trade, that I was always good at like technicals, and I thought that, you know what, I will never lose, that every trade has to be a winner. And I think when I took my mindset from looking for these 100% runners, so I think my two biggest things were like sticking to more profitable trades and not looking for these 100%, 200%, 300, just sticking to making maybe 10%, 20% on every trade. And I think that was one of the biggest things that got me into profitability, is doing that. And then the second thing was taking all the nonsense out of my charts, indicators, all the nonsense, all that I took out, and I started understanding volume and chart and candles. I think I would say between all of these, that's what became the biggest thing for me. And of course, not being a winner every trade. I think that's one of the biggest thing also, is that you can be a winner. Every trade cannot be a winner. It's okay to take the loss. And I think I used to suffer so much to take a loss, especially when I was green. Like even that day I trade BMR, I was green. I could have closed, but I still did some bad trades, and I lost some, and I made some on Mara and here and there. But overall, at the end, I didn't make any extra money. I probably closed even less than if I could have just sold Mara, like BRM, and closed it for the day, because I over traded. So that's a mistake on my part. But if that was one of the old days, I would have held my losses, that it would have wiped all my gains for the day, because I was so stubborn to take that loss. And it's that, how would I take a loss after being green? Even that I'm green for the day, like it's okay. I would take a loss on one trade. Doesn't matter how small. Even if it was 10% of my gains, it doesn't matter. I just take it and go. And I think before, it was so hard for me to let go of my losses. I would stick to them. I would end up holding bags and bags and bags and bags, and I would blame myself. I always sit with myself after I'm done. I'm like, why did I do that? Like, I would tell myself, why would I do it? Like, why did the trade go from being $500 up to being down $2,000? How did I let myself do that? How can I like kick in $500 in the green because I was so greedy and I didn't want to get out, that I ended up not just getting any green, that I went in the red and I added more, and I became like deep in the red just because I'm so stubborn of just letting a bad trade go. So that was, I think, one of my biggest thing was that, like, just letting go of my losses, like cutting my losses quick. It doesn't matter how big of a loss. I made a mistake, just take the loss and call it. They don't look at it twice. Don't say, oh, I wish I didn't do that, or I wish I didn't do that. Like, I could say, like, you know what, I wish I didn't overtrade the day on BRM, but it's okay. It's okay. I was in the green. I didn't care at this point. I have different mentality, so I don't really take it to the heart like I used to. But before, I used to take it so deep in the heart that I have one red trade. I could have 3 green trades, okay, and I take one red trade. That's gonna ruin my whole entire week just because I'm so stubborn to get out. So I think that's what a lot of people suffer with. I suffer with it for years, and I think that between this and having more down to earth targets, and not looking at this crazy stuff, and just being happy with 10% and 20%. I would say these are my biggest two. and it takes a while because this is not something you can learn, and it's not something to do with stocks. It has to do with you and controlling yourself and your emotion and being disciplined. So it doesn't matter how good you know your candles or that. Like this is all about being very disciplined in what you do. And I think if you master these tools and master your emotions and just tell yourself every day, like, you know what, I'm in a loss, I did a bad trade, I'm getting out, and just call it a day, because you're gonna make it again in the next one and the next one and the next one, you know. So I would say these are my biggest two advice, guys. Like, just stick to these two, cut your losses real quick, and have like normal price targets, you know, the not crazy price targets. You know, don't look for these 100%, 200%, 500% runners. Just stick to the 10%, 20%. If you feel like it's gonna run, you have a gut feeling it's gonna run, it's okay. Sell some and hold some. Don't ever hold everything till the last minute, okay? Just take the pressure off yourself, because we're all humans, we all do mistakes, we all have emotions, and when emotions takes on, it's crazy. Because one of the biggest things for me was revenge trading, because once you get in that rabbit hole, also you start going revenge trading, because now, you know what, let me double and triple my next entries on the same day. Like, instead of me just even calling it a day from being green to now going red, you won't even close on red, and you're gonna start revenge trading, and you're gonna end up from just being down 2,000, then I'm now down 10,000, just because I started revenge trading. And instead of like being like looking at my risk and like taking good trades, I'm basically gambling. I'm just pushing money in, and you know what, that sucker should fly, and I don't think of anything like no way that stock is going down. Like, I'm going down, like I'm gonna double my position from before, I make all my losses, and I'm out. So yeah, stick to that, you'll be good, man. Do you delete the price pivot? Sometimes, like these ones, I should delete, honestly, because it's too much. Like, it's ruining the chart. I know, like, it's a lot. Like, I need to delete some of them, but I don't have the time to do it. Normally, I would do it on the stock, but some of them I leave, because these dumpsters, they always run over and over and over again, so they become useful. But this is too much. I wouldn't leave that. Like the ones on BRM, maybe, yeah, I would leave. They're not that much, so I can maybe leave. That's fine. But this one here, this is insane. I wouldn't leave that. This should be out. I'm sorry, BMR. This should be out. I wouldn't leave that. But this here, I could leave these, because they're down here. It's done. Just in case the stock drops here, I would have them. But yeah, you can delete them or keep them. It doesn't matter, because at the end, these lines are going to be touched again. So if the stock runs, like let's say CRBP starts running again, as you see here, we kind of like, even that I kept these lines since the last run, like we had it from here, and look at that, the next days, like for the next 7 days, it's still testing the same lines. Like, look at over here, even without me moving them, you still tested here, you're inside this here, you tested this again, and it couldn't break it. So to keep them or not, that's totally up to you. It doesn't bother me to keep them or not, so I just keep them for now. Some of them I remove, some I keep. Yeah, man, I'm all self-taught, man. Nobody teach me anything. I teach myself everything. Nobody helped me with anything. I learn from other people, like here and there, like watching, of course, YouTube, reading stuff, but I'm mostly self-taught. Like, nobody said, like what I'm doing with you guys, nobody gave me that. Like, nobody teach me like that. Nobody sat with me, and I had to ask questions. That never happened to me. Can you touch about what you're looking for at or when it comes to volume? Again, man, I'm looking at volume that is not dying. Like I think over here, I didn't trade, I wasn't here. So let's look at that here. I didn't see that move from BMR. Like, I wasn't here. So let's say you're trading this here. What is that? That's not even pre-market. Okay, that's pre-market here. So over here, would I enter something in here like that? No way. No way. Look at that volume. The spikes are what? What is that? 4,000 shares? 5,000? It's not even worth it. But then comes 830. Yeah, it's okay. You're getting some volume here and there. But look at the volume. Like, You don't see this. Like, look at how BMR was. Look at this is what I'm talking about. Like, he had this spike. Okay, we died out, and then you have no volume. Like, yeah, you're building up some here, but mostly these are bag holders or the shorts are covering from here. So, but there is not real volume over here. Yes, that's what I'm looking for. If you're asking, so if I had anything, I'm waiting for this to happen, basically. So if you compare this area here, like this is volume, so you had all this. Why is the okay? So you had all this volume here, okay. Then this died out. You had all this here. Look at it's all basically died out. All this died out. Nothing. And then you start seeing these. So now I'm watching this. Like I'm not even looking at the chart yet. So basically we're just going, and I'm following these candles. I see this spike here. Okay. Now I'm watching it. Let's see what happens. And then I see this spike. I see more volume. Like I don't see these anymore. I'm seeing actual volume. I'm buying volume. And look at that. I'm seeing like if you put a line here now, okay, you're now trading more volume here than he traded here. So is that a good volume? Yes. Now I see volume coming in and more volume coming in. So yes, I could have simply entered here. Of course, I'm not watching. I'm not looking at support and resistance, but I mean, like, just looking right here, it looks like everybody jumped in this one because it broke that 1150, and that's why you had this big candle right here. And that could have been an entry for you, like over the 1150. So you had the 1150, 1155 area, and then another one would be right here. So that's why you have these big candles with big volume. So there's the volume I'm looking for when I'm trading. So you're seeing all this here happening, and as you see, look at the volume. Volume going up, up. Like even now we're getting dwarfed. Like the volume is too much. That now look at this. Now even the pre-market is gone. That's how much of volume you're having. More volume, and now yeah, it's going up and down. I didn't see the stock, but this is what I'm looking for. So when I see something like this, and it's like this took you from what? From almost 10 o'clock all the way to what is that? Like yeah, so that's for an hour and a half. You had volume to trade it up and down, up and down. So that's what you're looking for. Where do I get my news? From TD, man. TD, some Twitter feeds, but mostly TD, RSS, stuff like that. Yeah, Chris, I mean, you can get the script for volume, yes. But again, it's all this is nonsense. Like whatever you see, the labels, all that, colors. It's all about this, man. You're just watching the candles, trying to understand what the candle is doing. Why is it doing what it's doing? Okay, like again, like we know, like 1150. I wasn't trading, but just looking here, looking at that candle right there, you had that spike just because you're breaking a big, like you're breaking 1150, which is a whole number, and it's a resistance, and then you have a liquidity zone right here. This is a liquidity zone right there, and then you're breaking the liquidity zone with two massive candles. That's why you had this wick here. Probably like is that inside the liquidity zone? Probably. Like if I put liquidity zone, it's gonna be somewhere here. Yep. So yeah, you broke here, and then you had this, and you had the wick on the liquidity zone, then jumped, get another wick, because you probably have another liquidity zone right here, and that's why you have this wick right there. So you had this one and this one, and as you see, the wick went under it, wick above it, and then you had this massive spike after it. So that's what you're looking for. Trying to understand that what the candles are saying with what the volume is telling you to make sense of this move. Because again, as I said, like sometimes you will get this and it just dies out. So sometimes it's just pure pump and dump, man. So you have to be careful between what is a genuine move and what is a pure pump and dump, because you have a lot of rooms, that do what me and Rick and Bob do here, but instead of teaching you, they are stealing money from you. So what they do is that they give you these low floats and they tell you, oh, okay, I just bought, I took a small position here, but what you don't know is that he's been loading off your back for the past 2-3 days before the stock even moved. And because they made a big purchase today, the stock kind of moved a little bit, and they make all their forwards jump. And what happens is that the stock will move like this, and then suddenly it would go to here and then just red, massive red, and because they are dumping what they basically bought before they pumped it, they're basically pumping the stocks on their followers, which is nasty. I used to see this all the time. It's just it's very disgusting. It's very ingenuine for somebody to do that. So it's the worst, to be honest. So let's see. Do we have any questions that I missed in maybe Discord or something? Let's see. Nope. Okay. So yeah, guys. Again, my advice would always be for. I guess there is no more questions. So again, what? What do you mean by? Can you try rephrasing your question, Rich? I'm not sure. What are you trying to? What are the chart line indicators? The moving averages, man, I have 13 right there, 50, 200, and the 100. That's it. Are you more of a breakout? I play both, man. I play breakout and I play counter trend. Like, it doesn't matter for me. Like, if I see a move like right here, I would my perfect setups will be stuff like BMR or CRBP. What I see a stock that kind of moved and I know it has more to go, and I kind of wait for this consolidation area, and then when I start seeing it on level 2 that it's bumping, that's my favorite plays. Like, just wait for this consolidation and I see it here and I see it on level 2 and I jump in based on the confirmation, and then I see a lot of candles that are confirming the move is coming. These are like my perfect setups, but I don't mind playing these like these here. I don't mind playing these breakouts. So if I see these breakouts, I don't mind playing them. But over here, my risk is very tight, so I don't take too much risk in here. So let's say I want to play this here, and I know like there is a zone right here and a zone right here. So I would enter right here, like I see a test happening right there. Okay, I will enter like if it once it breaks actually. So I don't wait. Like sometimes I will get early, get more risk, but the perfect setup would be waiting for the 11:55 break and just getting filled on the ask. So I can get filled here 11:60 or something, and then I will have my stop right there. Like I'm risking 40 cents. But then what is my target? So my target would be anything above breaking the high. So I would say this was, if this was 11.90, I'm looking for a break above 12 at least, because I'm risking already 30 cents over here, 30 to 40 cents. So I need to make 80 cents actually more. So I'm looking for a break of 12 to at least take me to 12.15, 12.20. So it is worth it for me to play. But these are scallops, so I keep my wrist tight on these. But then if it goes, what I do is that I start scaling out. So I will scale out here some, wait, scale out, and then if you get this move, then you got lucky. But as you see, the reversal happened so quick that to the point that if you didn't sell anywhere here, you're kind of like freaking out now. So, and that's I guess what happened is that it kind of moved, and then you had this sell, like short sellers jumping in, and then let's see, they try to move it up again, but then this is the stuff you need to look for, guys. Like these candles here, this is indicators. Like you have sellers here. Look at these, like all these wicks. So the sellers basically got pushed down. So you have a massive zone here. And of course, I'm not looking at the chart. Like I'm not even going backwards, so we can't even tell the full story. But that's why you need to look back to know what is going on here based on data that we had from before. So if you see these wicks here, and we're looking here, what is that wick saying to us? So we have this wick. Yeah, so if you see here, guys, like look, like this was an area here that it had all this wicks here. It had all this, like this is a massive zone right here. So this is a liquidity zone right there. Okay, it's probably this area here. I would say this whole thing is a liquidity zone. So from this candle, I would say, yeah, look at this candle here. So I would say this here, like this here is a liquidity zone right there. And then you probably have this candle too. So this would be another one right there too. So see that, guys. So when we're looking now at the 1 minute, it kind of makes sense what happened. So we had this zone, and look at this. That's the zone that went under it. Kind of kept testing in it. Look how many times it tried to break in it out. So yeah. So candles tell you the full story, guys. Once you see the candles, like this here, this is not good. Like these candles here, this is not a good candle. You have this wick, wick, wick. Then you have all these wicks too. Like they're trying to break, and then another wick with red. I mean, even if you waited through this, and then you had this, and then you had this one here, I would be out with this one. This one tops, I'll be out between these here. Because that's indicating you have a lot of selling pressure right there. So even after the next move, it went from what, 13 to 15.50. That's a big move too. So you have more sellers here. So the sellers are pushed you down again. And I guess they just kept pushing the whole day. Yep. That's it. Yeah, you couldn't get it. Like basically if you put it here, lower lows, here you go, lower highs, lower highs, lower highs, lower lows. Like, yeah, it just kept getting pushed down. That's how you see it. How do you have the little ones? How do you have that one little volume thing above the bottom? Are you talking about this one here? Chris? Like, that's just volume. You should have it if you... It's just, this is like the volume of the bars. It's just, there's nothing to it, really. Yeah, this, I think if you go to settings, I have this one. You need to show volume subgraph. I think that's it. And then when you do your settings, you kind of have... You just make sure that you have your volume here, and just, that's it. There's nothing to it. I think you don't need, you know what? No. So you just need to have this. That's it. Just this one. Show volume subgraph. That's it. I think that's going to show you that. That's it. You don't need anything else. You don't even need to have anything in the studies here. You don't need any of that. So just do show volume subgraph, and that's going to show you this. How can you tell when a squeeze is coming? Ah, man, this is like the hardest question. For me to see when a squeeze is coming is I'm looking at level 2 and I'm looking at the candles at the same time. So that's what I'm looking for. So over here, like when we had this trade, is like I was looking at this here. And I kind of, when I seen these 3 little candles here, I still remember them even till today. That's when I knew a probable squeeze is coming. Because the thing is that since I'm a short trader, I know when stocks are not like trying to break down, but they can break. So over here, like, is the same thing what we seen on the other side now on the short side. So if you see here, we had this short pushed it down, and then longs kind of held the line, went up again, and then longs actually pushed it up just a tit, just a teeny bit, just a higher, okay? But then when they dropped it again, they couldn't even drop it any lower. And then you see this wick here, that's a reversal one right there. Okay, you have a reversal wick, then you have this wick, and then you have this wick, and then you have this wick. It's all indicating that the shorts are trying so hard here. And then also, if you're looking, the sell volume is kind of slowing down. Like if you compare the sell volume here, I mean, I need to take this out because, yeah, right there. So you see the sell volume here, it's kind of like, it's diminishing. It's not there anymore. So the sell volume is kind of like, they couldn't push it down in here. You had even more buys here than sell. And that's why you have this wick, which is indicating a reversal because of this. So you're not seeing the sell pressure going any further. So it kind of stopped. So basically, you know that buyers kind of told sellers, you know what, you're done selling to us. We're buying everything. And that's when I seen these 3 candles. And then I seen it on level 2 also. I seen some weird things happening here on level 2. And that's why I decided to take a position. And my confirmations was all these candles here. Because then you started having these. Even with the pushes down, you couldn't even get, like, compared to the buy volume, like, look how much buy volume you have. And you don't have any sell volume like the sell, even with all these candles. But again, you have all these wicks. So the shorts are trying so hard to push it down, and they just cannot succeed. That's it. They're done. And if you see, like, that's an A, B, C, D pattern right there too. And then you're holding this line too. So if you're looking, if I only have this chart, and I mean you have this trend line too, you're holding basically a trend line kind of from here to here. So you're kind of holding a trend line right there, right there. So it's a lot of things you're looking for at the same time. Your brain is trying to evaluate everything you're seeing, but that's my thought process. So because I'm looking at it, because I was looking to short, and that's why when I seen all this happening, I was thinking to take a short here because they were cheap to short, which was interesting for a low float. And also that's a thing that I learned, when it's a very low float and you have shares to short, it means that we're gonna get squeezed. So that's why I don't short this stuff when they're very. This is a very low float, and for brokers to have short shares, it means that they're gonna squeeze you out. So they're trying to make money on short side. So they're gonna squeeze all the shorts out. So I was looking here to short, and I was waiting for a break. I was waiting for a break under this. So because I see this happening almost daily. You have this move here, and then he gets more longs, and then you get a move like this, and then a move like this, and then it just dumps. But what happened is that we didn't dump, and I was like, okay, they're gonna try and move it again, and then they're gonna dump it here. And then these three candles kind of made me suspicious right there. So these three candles with level 2, and that's when I decided, you know what, nah, I'm not taking short, I'm going long. Because I figured a squeeze is coming. Of course, I never thought of a squeeze like this, but that was my thought process. You kind of have to always think like how market makers think and how shorts think, and just make a decision based on the data you have. But again, it's all for me was all about candles. I'm looking at these candles. This was a massive reversal candle, which got my attention, and then these three candles got my attention like pretty well. These three, because they had like very low volume, and normally market makers do that when they're about to do a reversal right there. When I do a volume subgraph, let me see. I just want to save this one, and then let me see. Yeah, right there. See, now I don't have anything on the chart. Nothing. I'm empty. See, I have nothing. If that's the number you're looking for, it's right there. There you go. You're welcome, RBR. It's gonna take you time, man, but again, just looking at these candles on volume, man, you should get it. So just keep watching volume and candles, and you should be fine. So even if I removed everything here, all my indicators and everything, you see, like, nothing. I don't have moving averages, nothing. And still the same thing is looking at this candle, reversal candle, push down, couldn't break, push down, couldn't break, push down, another reversal candle. So you have two reversal candles in less than 20 minutes. Same exact two. This is even more, like, this one has a bigger body than this one. This has no body, it's almost a cross, basically. And again, on the volume, you're seeing this, no volume, and then suddenly out of nowhere, market makers step in. Chris, I'm not seeing what you see. I'm not sure what you want. When I do show volumes, it adds the default TD volume graph. Yeah, that is the normal TD. I'm not sure what you're looking for, because yeah, that's the normal graph. I'm not sure what you're trying to get out of it. If you're trying to get these colors and stuff, that's not RJ stuff, but it's close to it. RJ has the same thing, so you can use RJ's stuff. I don't think that's the RJ ones. No, that's not the RJ. That's my thing. But it's closer. It's the same thing that RJ has, like the Dominator and stuff like that. So it's the same thing. I think RJ has that, so you can look for it in the TS scripts if you're looking for these colors and stuff. So that's something you can find in the Discord room. Okay. What are the... Yeah, just look in the scripts, man. I think it's called buy and sell or something like that. So look for buy and sell on RJ scripts, and you will find that. Okay, guys. Anything else? I think that's it. Again, guys, I'll try to be here at 6 a.m. tomorrow. I'll do my best. It's gonna be hard to fill RJ because RJ's what he does is totally different. So I hope I can fill some of his shoes because we're gonna miss RJ, and I pray for him and his family. So I'm gonna do my best to cover for him. I know it's gonna be hard, but we all gonna do our best to cover for him until he comes back. So just pray for him, and I guess I'll see you tomorrow, guys, at 6 in the morning, and I will go from there. I'm probably not gonna have the scans running for you guys because I don't have this setup. I have my own trading setup, so it might be different than what you guys are used to. It's probably gonna be this screen because that's the one I have set up for my YouTube and stuff. So you're probably gonna have this one. I'm gonna have running screens on my other stuff, and I'm just gonna be telling you what I'm seeing, and we can just look at the charts, maybe trade with you guys because I know we're gonna be trading, so I might be trading with you guys, and I guess we'll go from there. His sister, man, is sick, and I guess he kind of said yesterday on Discord, he sent a whole message talking about it, but his sister is not feeling good right now. You're welcome, Jade. You're more than welcome, guys. Thank you, Trade Freds. I appreciate it. Yeah, you guys gonna see my point of trading for the first time in live trading, right? Something. Actually, you did. Some of you saw me because like when I've been trading live after RJ for some time now, but you guys never saw me pre-market, so it will be something new for everybody. So we'll see how it goes. Yeah, man, praise for RJ and his sister for sure. Hey guys, at this point I would say thank you all for showing up, and I hope I answered all your questions, and I'll see you all tomorrow, and thank you for showing up. See you all, guys.